Sanjiv Bajaj, an interview which all of us have been really looking forward to in terms of where the shape of the economy is moving, what his understanding of the consumer behavior is, why Bajaj Finance right now is not looking at growing their entire book, so to speak. What are the trends in insurance? With Sanjiv Bajaj, we need to understand insurance also, life insurance, general life insurance and health insurance. What are the trends which clearly are visible there? Markets, meanwhile, I have to say, the star really has to be ITC today. 169 to 190. It's been a clean rally for ITC. I must confess and say that Sanjeev Puri spoke exclusively to ET Now, and where we got into a very long chat with him about how ITC and how ITC shareholders, they really need to take value of ITC, the cash they're generating. And I think the timing of that interview and the uptick in the stock, just a coincidence, but it's been a lucky coincidence, at least for the shareholders of ITC. Is Mr. Bajaj ready? Can we connect with him? Okay, well, it gives me great pleasure to now bring on board Mr. Sanjiv Bajaj, Chairman and Managing Director of Bajaj Finserv. He's someone I've always admired for the kind of franchise and the kind of shareholder wealth his companies and his businesses have created. Yes, markets for the moment may be nervous and the stock value is down, but given the the durability, the agility and the flexibility both the businesses he has, I think is simply incredible. Mr. Bajaj, fantastic to have you back on ET Now. Thank you for joining us. Hope all is well and things with your family and with your employees is all good.
All good, Nikunj. Everybody's managing as best as they can, and I trust that's true for you and yours as well.
Thank you very much, Mr. Bajaj. Let me first start with your analysis of the big picture. Now, everybody is using words like unprecedented, new normal, panic, crisis. What is your understanding of the environment?
So, Nikunj, that's a very general, loaded question. But the way I see it is that this pandemic, and let's talk about the economic situation that it has put us in, it has put the entire economy in coma, because both the demand side and the supply side have stopped working because of the lockdown that was required initially because of the extent that the virus hit us and hit many other countries around the world. Now, if you actually see in the last 2 months, essentially, people have become fearful. People have lost some confidence about the future. A lot of it has to do because we are living in a world of uncertainty, which is feeding the maximum fear from everyone, since none of us have experienced a situation like this in our lives. On the other hand, we know the challenges with the migrant workers. We know the daily rated people are the ones who are not necessarily getting paid, but the average salaried class has got paid for the last 2 months. Partly it was the government requesting it, partly it was a sense of responsibility. Their expenses, interestingly, have also come down in the last 2 months because a lot of the normal discretionary expenses have not happened. My own sense is that we need to get out of this lockdown as soon as we can. I think lockdown 1 made sense. We were fighting an unknown enemy. We had to ramp up our medical facilities, and some cities did it better than others, but we required that time. Thereafter, a lot of people have talked about what all needs to be done. You need to make sure you're practicing good hygiene, safe distancing. You need to ensure you're wearing masks when you're in public and take care of the elderly and those that can have greater susceptibility to the virus. But otherwise, the country has to go back to work in a sensible manner. If we do that, I think the 2 months of coma can end up leading to a quicker recovery than what most people feel. But it's like, if you've left your car shut for 2 months, sometimes you need to jumpstart it. It doesn't start on its own. And that is what is required right now for the economy, both on the supply side, where there are a set of measures already announced, but equally important on the demand side. If that happens, I think overcoming that inertia in the short term could lead to a quicker recovery than just taking our time to slowly add stimulus into the system, which could lead to a much longer recovery period.
Now, there are three ways in which government can stimulate the economy. Liquidity, which is now abundant. Second is fiscal, and then is monetary. I'll talk about, I'll seek your views on the monetary part from RBI, but on the fiscal front, you've been tweeting before the package was also announced that government will have to do the heavy lifting. Somewhere are you disappointed that the fiscal measures are not very stringent? A government could have really stimulated the economy by spending and committing to much more spend and not caring about rating agencies and caring about the fiscal deficit?
Yeah, because I believe it is incomplete. When a patient is in ER, you give the patient, say a patient is in trauma, the doctors will give the patient a cocktail of medication to take the patient out from their trauma. But that same medicine, if it is given for a longer period of time, could be fatal as well. So it's very important to know what is that short-term immediate dosage that is required for our economy. And to me, the government has made some very significant announcements on the liquidity side. We can see those. I just hope those announcements translate into simple, actionable rules so that it's easy for us to use the benefits announced by the government to convert their intent into action. We'll come back, as you said, on the monetary side, but I think RBI has taken significant steps and has been quite proactive over the last couple of months. But I do believe that we need to stimulate on the demand side as well. We need to give confidence to people that go back, start spending, buying things, of course, sensibly, because this economy is going to get back to its feet. We still continue to be a very young population who has significant unmet demands, unlike the West, unlike Japan. And as long as we can get the wheels running early, I believe that there is, as I said, a greater chance in coming back. I do understand the limitation that we can have with the fiscal deficit, what can happen with a derating on where we are, since we are just one level above junk. This is something that the government has to put together a 3-year plan. And I'm not an expert, to be honest on this, but put a 3-year plan, take it to them, tell them this is how we're going to spend initially. This is how the money, there's some money that's going to go to the poor, which is very much required, and they've already started doing that. But this is how the rest of it is going to be used for productive investments. Because eventually, if the economy grows, your denominator grows on the fiscal deficit percentage, and that will bring that down as well. There is no point having a successful operation but leaving the patient dead. So we have to make sure we look after the patient right now. And again, I'm repeating that while it will be a large dosage upfront, it does not have to be a continued large dosage ongoing. The initial overcoming of inertia should take us back to a reasonable growth economy.
Has RBI done the right thing, Mr. Bajaj, by extending moratorium? Because some would argue that at least at the retail level, this could shake the entire credit culture, so to speak, because up until now, the Indian retail borrower was bothered about paying EMIs and not defaulting. They cared about their CIBIL score, which made them eligible for a loan. But such a big moratorium, while it will protect the cash flow, but somewhere do you think this could have impact on credit culture?
Moratorium of 3 months was completely understandable because we were frozen as a country, as people. So nobody was going back to jobs. As I said, some were getting their salaries. So I can understand that. The second 3-month moratorium needs to be better calibrated. And I believe the notification which is out, there are still clarifications that a number of people, including we at Bajaj Finance, are pursuing. For example, if this second 3-month moratorium is available for large loans, say loans over 10 lakh rupees, loans that are multi-year loans, then it's understandable. Even there, I would have preferred allowing for a one-time restructuring, which gives the option to the lender to decide which are the truly deserving cases. rather than a blanket moratorium. But at least it makes sense over there. It does not make sense if you've taken a 25,000 rupee loan, an 8 to 12-month loan to buy a television or mobile phone. You've already paid 3 or 4 months of that because down payment is 20-25%. You paid 1 or 2 months before COVID struck us and the lockdown happened. By giving 6 months moratorium, it is unnecessary. It can create moral hazard and alter the credit behavior of the customer. So I believe that there can be a potential risk over there. This risk does get distributed by lenders because these are small value risks. But where we've built a very good credit culture at the consumer level, we should see that we don't vitiate that. There is another clarification that the industry is looking for, which is the second 3-month moratorium. Is it applicable only to the loans given pre-COVID? Because then the COVID situation was unknown to the borrower, or is it even available to new loans today? So if somebody were to take a new loan today, does he not have to pay for 3 months? I think that is ridiculous. Because if somebody is borrowing today, he or she is borrowing or if a business is borrowing, you're borrowing with your eyes open. And all that will happen is we will end up making lenders even more risk averse, and they will not lend. Because why will they lend with a higher chance of risk? And one may say that, no, the government has given this big line, they're taking all the guarantees. I think it is very creditable what the government has done. But there is also a responsibility on the lenders not to give money away, which is not going to come back.
Mm-hmm. So do you see that NBFCs, and when I speak to some other NBFCs also, some of your peers also, they've consciously told me that Nikunj, we are looking at reducing our credit book. We cannot deal with the ALM risk. We have no other option but to reduce our balance sheet size. Now, Bajaj Finance may not walk that way, Bajaj Finserv may not walk that way, but do you think for NBFCs in general and smaller NBFCs, there is going to be a markdown and a slowdown, and next 2-3 years, only few NBFCs will be able to do heavy lifting?
Okay, so let me draw a comparison there. As you said, in the case of Bajaj Finance, we have consciously, over the last 7 or 8 years, distributed our sources of borrowing. So our liability book is very well distributed. We don't have an over-dependence on banks. Secondly, we have a fixed deposit license. We went and we've created a whole fixed deposit retail franchise. Over 20% of our borrowings are fixed deposits. So that equivalent in many ways to CASA creates a lot more stability for the company. Third, most NBFCs don't keep extra liquidity for rainy days. We very consciously keep between 4 and 7% of our borrowings into liquid assets, where we are only earning what liquid returns are, 4 or 5%, instead of earning a 20% ROE on the business. But we ensure that the book stays solid. And at this point of time, Bajaj Finance at a consolidated level has liquidity of 21,000 crore. So we are sitting on significant liquidity. It probably takes away 300 to 400 crore of profit a year, but it creates a much stronger franchise, in many ways mimicking what a bank does. So these are, when we say that, it doesn't affect Bajaj Finance, but remember, we have made conscious choices over the last 5, 7, 8 years to build these capabilities up. It didn't come automatically to us. Now, when we come to other NBFCs, I understand that if you're a new NBFC, if you're 3, 4, 5 years old, if you have a small book, you can't do some of these things because you need to build experience, you need to build track record. But the other NBFCs, the larger ones who've been there for over 10 years, if they've not done this, they've only tried to ride the gravy train and milk every single rupee that they can get to build profit, rather than trying to build a more solid business. And I think they will all find themselves in difficulty today. They will have to change their business model on the liability side. They will have to see that they are a lot more liquid for the future. Otherwise, it will be difficult for them to come through situations like this.
Okay. With each crisis, Bajaj Finance and Bajaj Finserv, Mr. Bajaj, they've only become stronger. Post 2008 crisis, the businesses were incubated, they started becoming big. Then came the demonetization, where you were able to grow further. Then came the IL&FS crisis. Your growth became the best in the industry. In this crisis, when others are not lending, you have liquidity. Why are you sounding very conservative? You have ability to lend customers, you understand their data, but Bajaj Finance for the moment is saying, look, we will conserve and we will not go aggressive.
Okay, so let me come to the reasons for that. You have to keep in mind, you're referring to the earnings call that happened. We are still in lockdown, and lockdown creates uncertainty. Our people are not able to get to offices. Customers, till recently, were not getting delivery of non-essential goods. At a time like this, we would rather make sure that we conserve capital, we invest in cutting costs, so we utilize our times to prepare for tomorrow. But for example, now in the last 10 days, almost 70% of our branches around the country, so over 1,500 branches have opened now with skeletal staff, but they've opened now. We've already started doing, we were doing, when I last checked 4-5 days ago, 25,000 loans a day. Now that's a far cry from what we were doing earlier, but we are back in business. We do understand that certain lines, for example, our home loan business, that is still slow to start because our home loan business is really concentrated in the top 15-20 cities of the country. And we know that most of them are locked down. Very few are open where they're allowing us to open our branches. And this has been one of our challenges as well, when we have talked to various authorities to say that large NBFCs, HFCs, insurance companies should be treated as essential services like banks are. But that's not there in the Act. It needs to be changed. So because of that, we are not able to open offices in a number of places. Or if you look at SME and MSME customers, we've already started helping those that are restarting, that need some amount of loans. Some of our larger commercial clients, I was just talking to one yesterday, and in the auto business, and as they're starting up their supplies, we are there to help them as well. So we have got started, and this will be done in a thoughtful manner. The reason why so far we were saying we can't do much is because of physical limitation. As that opens up in a sensible manner, we will get back to business. And because we are completely digitally enabled in all our processes, not only in Bajaj Finance, but even across our insurance companies, our ability, once a customer requires a loan or an insurance product or something else, an investment product, our ability to assess and execute is completely online. And that helps us get back faster.
I know you will not like to comment on where the stock price has moved, but for financial stocks, the underlying market value is important because that just gives you more elbow room to raise capital. Having said that, the stock prices of both Bajaj Finance and Bajaj Finserv are down. Markets earlier, or your shareholders earlier, were excited about superior growth, more market share gain, great spreads. The same folks are now saying that we are worried about risk, slowdown and NPAs. What would be your broader message to your shareholders in this time of crisis?
Clearly, the stock is down 50%. Nobody likes that. It's a reflection of where we are as an economy. It's a reflection of uncertainty. It's a reflection of growth in the next 1 year. My message over there is the following. The company remains the same. It's going to get out of this even more efficient than earlier, even more digital than earlier. Second, if you look at our fourth quarter results, pre the provisioning line, we are still a very profitable business. So our lines are still creating significant profit for us. And we continue to be very well diversified across product lines, across geographies. So the general health of the company continues to be very strong. We have a very capable, motivated team that is just about getting going right now. Our offices have opened 10 days ago, even in Pune, in our head office. So the profit strength of the company remains. In addition to this, when you layer the liquidity strength, when you layer our ability to understand risk, as things open up, there is no reason why the company will not start growing sensibly and profitably again. And the interesting thing over here, Nikunj, is that if you look at our top 20 shareholders, these are of course all large institutional shareholders, non-promoter naturally, they have only stayed where they are or increased their stake. And most of them are telling us that, we're going to forget the next 12 months and we are looking beyond that. And as long as a country, we can manage to get out of the economic uncertainty and take the right steps to open up in a sensible manner, you will see us coming back with a much better FY22.
Okay, so if I have to, let's say, make the economy or divide the economy on three pillars: survival. Now, Bajaj Finance has liquidity. There is no problem of survival. This year will be about revival, and next year will be growth. I don't want to get this one wrong. So can I interpret our today's conversation that Bajaj Finance survival, no problem. Revival will happen this year. It will happen in a gradual manner. But FY22 and beyond is when the word growth will come back.
That's a great way to summarize it, Nikunj. Yes, with what we can see ahead of us right now, I think the timing of those three pillars is right. Just in Bajaj Finance, we have 41 million customers now. And what we've started doing over the last 6 weeks is doing more with existing customers. So every year, as you know, we typically add 7-8 million new customers as well. This year, since we know that number will be lower, for example, as we mentioned early April, that in the fourth quarter, we could have added 1 million more customers if it hadn't been for the lockdown that happened in March. So the new customer growth rate will be slower, but part of that will be made up with what we do with existing customers, both with loan products as well as fee-based products. For example, we've got this, as you know, this instant loan card called the EMI card. We have nearly 20 million of these cards now, and we've added another product on that, which is a whole set of health benefits, health loans, health insurance. This has been integrated. So we spent the last 3 months building out the technology to link all those additional features into the same card as well. And we started selling this card in this month. So there are a whole bunch of additional services that the team has already started working on, which will help us bring back growth at lower risk and make sure that this year is about revival before we then go to much better growth, hopefully in the next year.
So let's move to the leg 2. And leg 2 is you are in a position to tell us about how the consumer appetite, consumer spending, and consumer desire to consume will change. The initial part of the interview, you mentioned that consumers or salaried people are still getting their salaries. It is just that fear psychosis has kicked in. How do you see the consumer demand patterns and desire evolving and changing now?
A couple of anecdotes there. When our branches and the first set of consumer durable stores and electronic stores opened in Kerala, I think the first 2 days, the stampede was as much as what it was in some of those liquor stores. So there was this early desire to go and buy stuff which they needed for their house. Or for example, with spouses having stayed at home over the last 2 months, the demand for washing machines, dishwashers, microwave ovens has gone up. Whoever thought of dishwashers in India, right? But with household staff not being there, I guess the guys, and I'm being gender specific in this case just to make a point, but the guys were doing the dishes and now want a dishwasher. So we are still a consuming population. We have to rebuild confidence. And I don't think it's that difficult. Look at the latest CDC report that came out, I think it was last week. It talks of a much lower mortality rate from COVID-19 that was earlier estimated. They're now talking of 0.26 to 0.4%. It is still higher than influenza, but it is not crazy. It doesn't mean that we don't follow the precautions. It doesn't mean that we don't control the containment zones till the virus comes down over there. It doesn't mean we don't protect the elderly and those that are unwell. But this economy can get humming again. And I believe that you will see in the interim period customer buying pattern move a lot more online. I believe that retail stores will need to remodel themselves towards this. But a lot also depends as to how long this virus lasts. If this virus finds a cure or a vaccine in 12 months, and in another 12 months, let's say at least the big cities get protected, people may go back to their old habits. If it takes 5 years and people are scared to go to crowded places in 5 years, then the habits could change a lot more online. But interestingly, in the last 60 days, for example, when I look at a life business, our agency workforce, about 30% of them were still working offline. These were elderly agents, they were still bringing big business, and our teams were accommodating them. They have all in the last 60 days moved online. So we are completely online with our policy issuance, our renewals, our claim management. Now, some of these practices, we have to ensure that we continue as an industry because it leads to higher efficiency. So in the same manner, some part of consumer behavior to buy stuff, even to buy groceries online. My own wife and kids are doing that now, and they weren't doing it 3 months ago. A lot more online usage will happen, but I don't think we will completely move away from the social side to it. We are still very much social animals, and as long as this virus is handled in a reasonable period of time, you will see a new balance appearing.
You know, the dishwasher, Mr. Bajaj, is such a sensitive thing that you've just touched base with Har Ghar Ghar Ki Kahani. Trust me, even in my household, we are contemplating to buy a dishwasher, but I'm going to keep that conversation aside and talk about this lockdown. Personally, for you in this lockdown, what has been your biggest learning? What has been your toughest moment? And what has been your biggest joyful moment?
Clearly, the joyful moment is the amount of time that I've been able to spend at home. I don't know if it's joyful for my wife and kids or my father, but it's been joyful to spend all that additional time, even though sometimes you get fed up of each other. But it has just made us open up board games, play carom, which we had stopped playing a long time ago. My son and I play table tennis now. Otherwise, we used to just work out and swim. So you're doing a lot more stuff together and a lot more fun stuff. I would say the learning has been, and I think it's a learning that we as a society are experiencing, which many generations before us doesn't, is how do you really manage uncertainty? You know, VUCA has been a word that came up, I think, after the last financial crisis. But this is really a time of massive VUCA. How do you manage your business? How do you manage your people? How do you keep communication open? We've always been focused to build long-term businesses that are built on excellence, that are built on sustainable profit. What does that mean for actions that you take in the short term? What does that mean for building resilience in the business for the long term? So there are multiple learnings, and we are learning every day, but we are applying them as we are learning as well. As far as challenge is concerned, I must say that over the last 10 years, across our businesses, while you've seen Bajaj Finance grow very significantly, we had to completely transform our life insurance business, completely change the management team, change our products, cut down on manpower, and we've rebuilt it in the last 2-3 years. That experience is helping us right now. We had a great mentor in Anupam Nani for the last 12 years. He trained us all well, unfortunately passed away suddenly in February. That was a huge challenge for us, but we are learning how to move ahead with that. So we have faced our share of challenges. And this is one more challenge, which collectively, I have a great senior management team, very committed, motivated, much more hardworking than I am. And together, we will get through this challenge as well.
You a completely different question, not about Bajaj Finance, not about the economy. For someone who is in 20s and wants to start right now, has limited capital. So what would you say that what should be a starting point for a good business in this kind of an environment? I mean, For somebody who wants to start humble, wants to convert this opportunity into crisis, where do you think this crisis will give opportunity for someone who wants to be an entrepreneur and wants to take a risk?
There are a number of opportunities that will come up, and I believe that many of us get caught up or freeze in the uncertainty of the last 2 months. I believe 3 months, 4 months down the line, we will be in a much better position. Things may not be hunky-dory at 7-8% growth, but we will be in a much better position. So I would firstly, if I was a young entrepreneur starting up, not get caught too much in the rhetoric of the last 60 days. My confidence and belief in India continues to be very strong, and 6 months, a year, here or there doesn't do anything. I'll draw another analogy. Even when I used to be in high school, finishing your 12th and going into college, if I had to take a drop year and do other things, it was unfathomable at that time. How could you take a year off? What will happen to you? You will fall behind in life. Today, it's reasonably common. If kids are unsure of what they want to do or want to get a year's experience or travel the world if they can afford to, or backpack, people do that. So we should not take short periods of time too seriously. I believe the opportunities will continue to be significant, whether in the digital space or even in the real space. Yes, many restaurants will fold up, new ones will come up. Some businesses will cut down in size, but others will grow. I can understand that we are still talking at a point in time when we are just slowly trying to get out of the lockdown. So it does create a feeling of helplessness. But I'm pretty sure that a year down the line, none of us will be feeling so.
Okay, final question. Why has Sanjiv Bajaj managed to create 2 successful and great businesses? You are not the first NBFC of India. You are not the first insurance company of India. What is the secret sauce here? Is it execution? Is it planning? Is it vision? Or is it a good head start you simply enjoyed because you represent a great business family?
I wish I knew the combination of that answer and the right dose of each of the points you mentioned so I could keep replicating it again and again. But I think the answer is simple. One, we built a very strong team early on. We paid the best. Nanu and I paid the best that we could in each year that we hired talent. Initially, of course, we could not pay much. As we grew, we could do better. So we got really good guys. We got guys who were not necessarily the most learned and the most capable, but those that were hungry to do well, those that wanted to build legacies for themselves. And in the early years, we have seen that with Rajiv Jain and his team. We've seen that with Tapan. I can see that with Tarun now. So people makes a very big difference. Second, we built an environment that provided them with the resources, but that challenged them constantly. And I think that involvement from people like us who are non-executive in the companies but play that strategy role on the board side is very important. How do you provide the tools? How do you help with the long-term vision? But how do you challenge constantly to improve? Third, we built a culture focused on excellence and innovative disruption. And we may think that, these are words, but after we finish today, I'm spending the next 4 days, 8 hours a day with our 2 insurance companies, overseeing our projects that we run side by side to running our business. These projects will create innovations and improvements for the future. Fourth, we've always been focused on building long-term sustainable profit businesses, which means we are willing to say no to short-term opportunities which come in the way of what we think is right to do in the long term, ethically or otherwise. Finally, I would say that there's always somebody up there smiling that makes a difference. So it's a combination of these factors.
Well, Mr. Bajaj, thank you so very much for your thoughts, and what a lovely answer. I always look forward to our interaction, and more than your take on the economy and on Bajaj Finance, on Bajaj FinServe. I think it's the real story what you've shared with us is simply incredible. Stay safe, sir, and thank you very much for your time.
Thank you, Nikuj.